Welcome to my channel CA Gayatri's Academy, and today we are going to deal with the topic corporate governance. So the question is, what is corporate governance and what are its principles? So by corporate governance we mean the system of the rules, the practices followed, and the processes by which a company is directed and controlled. So corporate governance is mainly refers to the rules, practices, and the processes by which a company is directed and controlled. It involves the balancing of the interests of the company's different stakeholders. What are the stakeholders? Just like the shareholders, the management, the customers, suppliers, financiers, government, and the community as a whole. And now the corporate governance has four principles. One is accountability, there is transparency, there is fairness, there is responsibility. When we speak of, we will going to speak one by one. What are they? Corporate governance. In the context of corporate governance, when we say of accountability, it's the obligation of an organization to accept responsibility for its decisions and actions. In other words, we can say in the context of corporate governance, accountability implies the responsibility of the chief executive, the chairman, or the board of directors in the best interest of the company and its stakeholders to use the company's resources. Okay, so they will use the resources of the company in the best interest of the company as well as of the different stakeholders. Then we speak of transparency. When we speak about transparency, it means the practice of openly and freely sharing information with the stakeholders. In the context of corporate governance, we'll say it is the accurate, adequate, and the timely disclosure of the relevant information about the operating results, etc., of the corporate enterprise to the different stakeholders. Then we speak of responsibility. When we speak of responsibility, we mean the responsibility is the portion of the work which is done by the different directors, by the chief executive, and by the company's head in order to ensure the board is effective, independent, and accountable, right? And when we speak of the duty of the management to act in the best interest of the organization and its stakeholders. So responsibility comes here when the management has to act in such a way that all the organization's stakeholders is given interest to, and every need of different stakeholders is seen into. Next principle is the fairness. When we speak of the fairness, the principle of treating all the stakeholders equitably and impartially. What does it mean? That treating all the stakeholders fairly, especially the mandatory shareholders. Okay. Now, good corporate governance helps a company build trust with investors and the public and enhances its reputation and promotes long-term success of the company. Thanks for watching, and if you like, please do subscribe and comment.